World at 10, and here's the part of the show that I was waiting for. What a year it's been for Europe. If we were awaiting the outcome of yet another EU summit, if we weren't doing that, then we were busy counting down nervously to a Greek default. And when the bond pressure spread to Spain and Italy, it looked for a moment that the two-decade-old monetary union was on the brink of a breakup. The EU and the Euro survived the year, albeit in battered form. Will next year be any better? Well, joining me to talk about that is Moorad Choudhry. He's the head of business treasury at RBS's Global Banking and Markets Division. Moorad, thank you very much for your time and belated wishes for a Merry Christmas.
My pleasure. Thank you. Likewise to you.
All right, thanks. I'm going to start by asking you for your reaction to the latest piece of news that we've had come in the last 24 hours, and that is that Eurozone banks have deposited about 412 billion euros of cash with the ECB at about 0.25%. That's the rate that the ECB is paying out, versus the fact that just days before, 520 banks borrowed about 489 billion from the ECB, paying about 1%. What do you make of this information, considering that just a few months ago when we spoke, you were talking about increasing pressure on the interbank market?
It's a worthwhile observation. I mean, it's simplistic, I think, to say that this indicates heightening tension in the interbank market. In fact, you pointed out to that earlier conversation where we spoke about heightening stress in the interbank market, and that was in response to indicators like, for example, the difference between the overnight and the 3-month rate, and also in the US dollar market, various indicators indicating this increasing stress. And in fact, what the ECB did by putting up a 3-year repo funding facility, again, which you saw was nearly 500 billion subscribed, was partly in response to this. And I think that's a very welcome move. It's taken out any of the funding stresses that EU or European banks would have had going into 2012, and it's taken that and addressed it head on. We've got long-term funding in place, provided sufficient collateral is available for any EU bank with a connection to the ECB. So that has been a good policy response, been welcome, and it's sorted out the term funding pressures that certain European banks may have found themselves under going into 2012. Now, of course, you point out this very large deposit in the short-term market, the overnight. That's not necessarily indicating that banks aren't lending. It just shows that obviously they have taken care of their long-term funding requirements or their medium-term funding requirements. But in the immediate future, like we're talking in the next very short-term, 0 to 3-month space, there might not be that kind of asset origination, lending doorways or lending openings available to banks. So in the short term, they place the cash with the ECB. I wouldn't read into that as saying we've got increasing stress. If anything, I would say in terms of funding pressures, that's been met largely by the ECB 3-year repo, and that shouldn't be a stress point for European banks. They will have other stress points to contend with, of course. You've got the sovereign crisis that you've already mentioned, and they've got the state of their own balance sheets in some cases in the southern Eurozone with real estate and other type of marked down assets. So there are still plenty of issues to consider, but funding, I'm happy to say, and my personal opinion, isn't one that we should be immediately worried about, because we now have the long-term funding sorted out.
And that would reduce considerably the threat of a European bank failure, something that we've been nervous about increasingly through the course of the year 2011.
Well, yes, it meets one part of it. As I said, what does the banks face? Two pressures in the aftermath of the crash. They face liquidity, funding pressures, and they face their own balance sheet quality pressures. Their asset pressure. In terms of the quality of the assets in their balance sheet. Certainly, in terms of funding, we've got a funding facility set up by the ECB now, which is a good thing. So I would suggest that the interbank funding stresses in the euro currency, we have to stress euros, isn't so much of an immediate issue. That doesn't necessarily mean, of course, that in non-euros, so let's take dollars as the most heightening example. In the non-euro space, certain banks in the European Union or indeed in Western Europe may not have certain funding pressures. A good indicator of that has been the difference between the dollar and the euro, what's called basis swap. It's basically a rate that you have to pay if you are borrowing in euros and swapping into dollars to meet your dollar funding requirement. Now, that indicator has been widening in the Q4 of 2011, so that's something that banks need to be mindful of. So in the non-euro space, there may well still be some concerns for certain banks, but in euro space, I would say it's no longer an issue, mainly because of what the ECB's done.
All right, let me try and look a little forward into the year that we are faced with now, Moorad. What do you make of the fact that we spent all of this year very nervously counting down to a potential default by Greece, and you know, some people already said there was a technical default because you were asking private lenders to take a haircut, but it wasn't a full-scale default. That didn't happen, thank God, this year. Do you see those worries continue into next year? We've seen bond pressure on Italy and Spain, and yet that has eased towards the end of the year. Well, how do you read into the sovereign debt issue problem that we're going to be faced with next year?
Well, in a brief few words, it hasn't gone away. Basically, I wouldn't read too much into bond yields easing in the last few weeks of this year. All the problems that markets have struggled with in the Eurozone in 2010 and 2011 are still with us going into 2012. I would imagine some sort of technical default or otherwise in the Greek sovereign space in 2012. They've got to address how they want to deal with that, whether it's a 50% voluntary write-down or what have you. But I would imagine something like that does happen. But of course, all the fundamental and structural issues that the Eurozone has been faced with, and which southern Eurozone governments have been addressing, i.e. their rising borrowing rates in the international capital markets, these problems are still with us and need to be addressed. I would say for the euro to survive in its current form, to be long-term viable in its current form, we're basically looking at some sort of fiscal union being agreed within the Eurozone during 2012. We may not get that. I mean, it's possible. I mean, look what happened in 2011. We didn't have the denouement. We didn't have either a breakup or we didn't have a full default. We just kind of bumbled along in a state of volatility. It's possible we may still get that all through 2012. I don't think so. I think at some point the borrowing rates for southern Eurozone countries may reach a fever pitch, or we may have a country like Greece that is may be found unable to roll over short-term debt, and then you get some pressing of the problem and it has to be dealt with. So whether it's that, whether it's market-induced or some other issue, I do think we'll get some sort of fiscal union arrangement being discussed, which would enable the euro to continue in its current form. I personally would imagine that's what would happen, but of course it depends. There could be some unexpected event that sees a country leaving the eurozone, or there could be some other similar catastrophic event like a default that isn't voluntary, which would of course then result in still greater volatility. So all these problems are still with us and they need to be addressed by the EU leadership.
So what you're saying in short is that though we visited the brink many times through the course of this year, we had countless EU meetings and summits, we really haven't made any progress in the last 12 months of addressing the structural issues that are at the very core or heart of this sovereign debt problem. We've managed to gloss over with a few band-aids. We're going to be faced with all these issues all over again next year.
Absolutely. In fact, you've done, I need to thank you for doing a very good job of summarising my personal view on that position. Absolutely. That's basically what it is. We haven't had that. We've had every new announcement buying a little time, let's say a week or a few months, and then the time runs out and the market pressures, i.e. in terms of rising bond yields and rising bill yields, come back again, and then the EU leadership is faced, or the Eurozone leadership is faced with having to address the problems yet again. So we've had countless summits, and I dare say that will continue. We haven't had the solution. The structural problems that the Euro faces in its current form, i.e. to be long-term viable as a monetary union of the 17 current members, those structural problems, which have been with us right from the start, they only crystallised as a result of the financial crisis. Those structural problems are still with us and need to be addressed in some form, whether it's fiscal union or a centralised budget-making authority, and indeed also a greater role for the ECB. Will the European Central Bank be appointed in some more formal lender of last resort capacity to the EU, to Eurozone's banks, or will it have some underwriting capability for Eurozone debt? That remains to be seen. But those 2 points, i.e. the role of the ECB, don't address the long-term issues. That needs to be some sort of fiscal union. So all those things haven't been addressed. They're still on the table and they need to be considered during 2012. If we don't get them, we're going to maintain with the current level of uncertainty and volatility that we've been observing for in fact, the last 2 years.
All right, one final question, Moorad, and that has to do with what you'd like to see, or what kind of role you'd like to see the ECB play next year to help